my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and LME 3-month zinc. I'll start with LME 3-month nickel. The move down 9 weeks ago was finally halted by the slowly rising long-moving average, currently at 16,210. Since then the market had been framed in between the long-moving average below and the middle time above, currently 16,790, of the shallow yet big 2017-2018 bullish shift pitchfork. The subsequent back and forth action ran for 7 weeks, obviously indicative of overall indecision, not on an intraday scale but on an interday scale. Initially I looked at this as being a possible bear flag or halfway hesitation type action. However, 2 weeks ago, after a very agitated week when prices tried for the first time to go below both the lower time, currently 16,215, of the recent early October 2020 to early March 2021 shallowly bullish shift pitchfork and the long moving average, and failed, with a very important key reversal up on the Friday, I knew the move lower looked doomed, and I've removed all potential targets below. What the market did by moving back up over the lower time and the long moving average, how swiftly this was carried out, and then the fresh move higher over the middle time of the 2017-2018 bullish shift pitchfork was, as I said last week, indicative of some heavy support. We did not see this support prior in the earlier breach in late March, as was the way of the market, seeming not knowing its mind, making a wrong choice lower, then correcting it rapidly. This was not there before. On Wednesday of last week, in evidence of its bullish power, the market drove up through both the short medium moving average, currently at 17,005, and the medium moving average, currently 17,320, closing over both on the same day. Last Thursday was a hesitation, but Friday saw a move further up, stimulated by fresh ammunition the market gathered from the medium moving average. Today we've seen a fresh move higher, still, through the October 2019 high at 17,815 and the key very recent 50% Fibonacci line at 17,890. Ahead we have a congestion area from August 2014 between 18,400 and 19,070. This was not that noticeable last time we tried up here, but this time we also have the middle time within it, currently 18,525 of the recent bullish shift pitchfork, as well as the old August 2019 high at 18,850. However, if you look at the ammunition below over March and April, you'll probably realize that this move up may easily overcome such resistances. Indeed, the action since February now resembles a pattern known as a big W. This is a variety of the double bottom pattern. The steep sides are what give this action its name. Typically a move back up on the right hand side of the pattern matches the left. Now the question now is whether the pattern started at the hesitation in early April at the 18,650 area, or earlier and higher in the 19,940 area at the September 2014 high. A really interesting one there. LME 3-month zinc. I wrote back in November last year how the bullish incentive was still alive. This was due to the, and I quote, shallower bullish shift pitchfork with the same move, that's early July, early October 2020 move, end of quote. I also added, and I quote, so while superficially the market may be topping and looking sideways to a potential move lower, the reality is that the bullish incentive is still alive, though at a less acute angle. It all depends on what the market would do with the big old 50% Fibonacci line at 2806, because there's a lot of support below and also resistance above, end of quote. Since then, the market first chose to punch lower, actually exiting out of the bottom of the bullish shift pitchfork, but only to reach target X for a and I quote, large rounded top with elements of a triple top within it. Potential for the triple top would be where the target X is placed on the daily chart, about 2578, end of quote. Well, once target X was achieved, the market turned back upwards, halting only just before the April 2019 high at 2958. Since then prices have dropped, then been held on a closing basis by both the short medium moving average, currently at 2832, and the medium moving average, currently 2793, ending up back where we started in November last year at the 50% Fibonacci line at 2806. Problem now is that time has moved on and the lower time, currently 28.92 of the original shallower bullish shift pitchfork that I mentioned earlier, has risen and been threatened once again. Only this time the market has seemingly understood this threat and moved higher to combat it. Last week has been a period of hesitation with one indecisive doji cross and 3 indecisive spinning tops, one of which was also a key reversal down that failed. Yet last week prices penetrated the key April 2019 high at 29.58, the highest the market has been since June 2018. Then today we've even managed higher, and we currently look set to make a first close over the April 2019 high. So whilst we've had plenty of false breaks above 2900 in the past, this one looks genuine. In which case I'd like to reprise part of my commentary from last week. You see, there's the possible, now very probable, diamond pattern formed over January to March. This pattern could set this current move up as a righteous move higher. I was ready to retire this pattern 2 weeks ago. I said it so much as the time, but I've kept it on as, despite the delay, it may give a target to look to on the upside. So, in case of this break higher being genuine, and also taking into account the idea that the bullish incentive is still secure, place a couple of possible targets topside. Target X1 in the 30.95 area is a preliminary target for this misshapen diamond as a continuation pattern, whilst target X2 in the 32.15 area is a full move higher from the diamond. This last one is coincident with the June 2018 high. It doesn't mean they will happen, it just means that we've started to move up and you'll have an idea of the size of the move available should it continue. Thank you for listening. This short weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.